guys, it's Nathan Birch here from B.Invested.com.au. I'm here today answering questions from Facebook community members. So if you want to be part of the community, the link is below. You know what you got to do, just click on it and go to the link and join up. Today I've got a question from Brendan Black, and he has asked, you often talking about your foundation portfolio. Can you expand on what this should be made up of and some example figures? Good question, Brendan. From a foundation portfolio perspective, it is your base portfolio. It shouldn't be anything risky, it shouldn't be anything out of the ordinary. It should just be fundamental properties which are bread and butter, that bring in a good yield, going to have good equity and have good upside for capital growth. What I think of a good foundation portfolio is something between, say, $200,000 and $300,000. Obviously the lower the better. Something that's below market value, so you're making $30,000, $40,000, $50,000, $60,000 worth of equity from day one. Something that's got a strong rental yield on it, so you've got a neutral to positive cash flow from day one and has good upside for growth. Coupled with this, I think that a good foundation portfolio is made up of predominantly capital-based city properties, so whether that be in Sydney, whether it be in Brisbane, whether it be in Melbourne. I know the guys in Melbourne don't have too many properties real cheap down there in the cityway, but it should be a good metro sort of property. For me, the foundation portfolio, if you've got, say, 10 properties in a foundation portfolio, and that could be $2 to $3 million worth of property, if that doubles over 10 years' time, you're looking at $2 or $3 million worth of net worth or capital appreciation or profit, whichever way you want to translate that to. That gives you equity there to be able to deploy into more fun stuff, whether it be a shop, whether it be a development project, whether it be into a hardcore renovation, whatever it may be. I see a lot of people go out and they say from day one, I want to go and buy a property and sell it and make 50 grand. If you do that a couple of times a year, you've got to be lucky enough to be able to buy something that you know is below market value, you can add some appreciation to, you can sell it, you can flip it, and you can get the profit from. If you do have all those things lining up in your direction and making it work for you, you can make some profit. However, you sit there at the end of the year and you say, I've bought a property, I sold a property, made 50 grand, I don't have any properties anymore. I think it's important to hold your portfolio so that will go up over time. You have the foundation set. Then you do the fun stuff after that. If you want to do a flip, if you want to do a renovation, if you want to do, well, you can do a renovation in your foundation portfolio, but like a renovation to sell, a development, a subdivision, whatever, have the foundation first, because no matter what you do after that point, those properties are in the background doing their thing, and you can build from there, and if you check back in 10 years' time, those properties are just doing their thing and making money and going up for you. So foundation portfolio is very important. Not everyone does it. Most people don't actually do that. But for me, it's what has worked for myself, has worked for investors that I work very, very closely with from my investment firm, B.Invested.com.au. And yeah, from that perspective, it's very important to have a foundation portfolio. It's something that people don't look at in all too much detail, but if you do the numbers, I encourage you to do the numbers and go, okay, if I buy and sell a property a year, you're being an active investor. If you build a property portfolio, that is being a passive investor. And for me, I want to be a passive investor. I just want to know that I'm making money in the background. It doesn't matter what I'm doing, I'm still making money. Whatever I'm doing actively is just for fun on top of that. So from that perspective, yeah, do the numbers on what works for you guys when watching this video. And if you want to have more tips and information, probably best to go to the B.Invested.com.au website, and there's a link on there to actually subscribe to regular updates via the form of newsletters that come out regular. So thanks a lot for asking the question, Brendan. Thanks a lot for everyone watching this and letting me be a part of your home and education and entertainment. So I'll catch you with you shortly.